Well, we start off tonight's show with that OPEC Plus meeting. We know OPEC Plus ministers agreed to keep the current production policy during that virtual meeting on Wednesday. Now, questions had arisen whether prospective increases in demand from China, the world's largest crude oil importer, could push the Producers Alliance to raise their output. Now, OPEC Plus has long taken a cautious approach in its decision-making as it contends with market supply-demand fundamentals, as well as pressure from international consumers to help ease the burden on households. And of course, we must add the need to incentivize further investment into spare capacity in the market. Well, let's now get into the outcomes of that meeting. We're joined by Amina Bakr. She's a chief OPEC correspondent and the Dubai bureau chief at Energy Intelligence. Great to have you with us on the show today, Amina. Now, as expected, we saw today's meeting end with no recommendations to change the group's existing production policy. What is your take on the outcome and certainly the tone coming out of today's meeting?
Sure. Let me just clarify one thing. Today was not an OPEC Plus meeting. This was a JMMC meeting, which stands for the Joint Ministerial Monitoring Committee meeting. And these meetings take place right now under the current agreement every 2 months. So this is the first JMMC meeting to happen in 2023. So these committee meetings basically review the state of the market and then make recommendations, if required, to alter the current production agreement. We're all aware that the current production agreement is the cut of 2 million barrels a day, which is supposed to last until the end of 2023. So given the current market environment, the members of the JMMC committee, which includes Saudi Arabia and Russia, decided that it's best to keep the current agreement in place. So there was no recommendation to change anything. This was in line with market expectations and what delegates have been saying now for months. So no surprises here, really. It was all expected. I mean, especially if, Brent is still trading in the mid-80s. So it's a favorable environment for the producer states for the time being.
Amina, thanks for clarifying that for us. But of course, as you said, today's decision, it was not much of a surprise. But the reality, when we look at what they were discussing today, is that there's a lot of uncertainty right now in the oil market. We have the EU's upcoming Russia oil product ban that's coming up, I think, on the 5th. What are your thoughts on those uncertainties that exist right now, the discussion around them, and also expectations for those EU sanctions?
For sure, there's a lot of market uncertainty. Two of the things that OPEC is watching very, very carefully is the easing of the pandemic lockdowns in China. China coming back into the market, of course, it's going to have an impact on demand. And there is an expectation. I mean, the deputy Prime Minister of Russia, Alexander Novak, mentioned that there is an expectation that we are going to see an increase in demand. We just don't know when and how sustainable it is. So I don't think the group is going to make any changes in the current policy until they see a sustainable demand growth from China that requires an alteration in the production agreement. Second, as you mentioned, are the sanctions on Russian products, which are due to take place on the 5th. So you have uncertainties happening on the demand side, you have uncertainties happening on the supply side. So given this kind of murky environment that we're in at the moment, it's best that OPEC steers away from any hasty decisions, takes cautious steps towards navigating this. And the best thing to do right now is just stay the course, keep the agreement until the end of 2023. So this is what we're expecting for now.
Now, in light of all this, Amina, I'm curious about the outlook for oil prices going forward, because as you said, oil demand is expected to rise. China reopening has certainly added to demand in the market. So how do you see that impacting prices going forward?
We're still facing a situation where we're having tight spare capacity within the OPEC Plus group. The only producers that have spare capacity at the moment are Saudi Arabia and the UAE. These are the two countries that could bring production online quite quickly. So if you have a sharp rise in demand, I mean, many bankers have noted that we might see oil prices rise to 100 or even over 100 if we're faced with that situation. Plus, if we see the impact of the sanctions taking a hit on Russia, so there is that upward risk. One thing that some traders sometimes misunderstand is that OPEC does not favor very high prices. So a price over $100 isn't necessarily a good thing, because that's when it starts destroying demand. So having oil prices in the range of the 80s to $90, that's fine. But anything above that is harmful to demand.
And of course, there's the supply side. We know OPEC's oil output did fall in January, but what is your outlook for output going forward? We've seen several OPEC members pumping below their targets as well. What are your thoughts?
Yeah, for sure. There is a problem with many OPEC states not meeting their quotas, not just because of sanctions, but because of technical reasons. And this is an issue, I mean, we've raised for a while now, even since last year, that the current quota system does not reflect reality. So the 2 million barrel per day cut in reality is just a million barrel a day. And this is one of the challenges that OPEC faces this year, is to find a solution to revamp the quota system to reflect this reality. When we're going to see that, it's still unclear, and they need to come up with a solution that where countries could actually meet their baselines.
Well, we do have to leave it there, Amina. As always, thank you so much for joining us on the show and for those great insights. That, of course, is Amina Bakr. She's a chief OPEC correspondent and the Dubai bureau chief at Energy Intelligence.